Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Friday, the 4th of June. Starting off with Carclo, where we've got high hopes for the upside here. We've got this rising trend channel from March, top of the channel there, heading towards £1.15. I suppose that's a 2 to 3 month target, so maybe by the end of July or just after that. The trigger on the next move higher, probably an end of day or a weekly close above that May resistance line there. That's running around the 62 pence area, so if you don't believe that the upside is quite as magnificent as it appears, then you'd wait for at least 62 pence to break. But RSI at 57 around the box seat in terms of the 50 to 60 range for the start of an uptrend. And all the near-term moving averages rising as well, so looking pretty impressive for Carclo at the moment. Obviously, an end-of-day close back below 51 pence. The last swing low there would question the size of the upside and also the time frame. Another stock which is making an appearance on a rather thin day and a thin week really for small caps, half-term issues, etc. We've got this bear trap that we had below 65 pence on the Echo chart yesterday, and quite a remarkable rebound that we've had so far today. End of day close above the 50-day line at 72 pence, or if you're fussy, maybe a break of that April resistance line there at 75 pence could be the trigger for a move up towards the 90 pence area, which is a February resistance line projection, and that could be seen as soon as the end of next month. But the ideal scenario is that we hold above the low 70s ahead of a move to 90 pence and beyond. Moving along to a stock which is has been featured recently, but is back today. Here we've got Gatica. The current scenario here is that we're looking at a decent breakout through the old March resistance. That was around £1.59. Currently, we've broken the late May high, the peak of that of last month at £1.98 and above £1.98 on an end-of-day close basis, looking towards the top of the rising trend channel from January as high as £2.70, £2.80, and that could be seen by the end of this month. The only slight question mark is that the RSI is at 91, which is obviously very overbought, but this looks like a very strong trending situation. So the RSI being overbought for extended periods of time, not really killing the price action in any meaningful way. Moving along to Harvest Minerals, which I think I covered a little while back, but we're returning to the situation with a breakthrough May 4 pence resistance, about 4 pence for the shares, looking towards 5 pence over the first part of June. If you're more ambitious about the stock, then you'd probably be targeting a rather steeper line of resistance up towards 7 pence, that July resistance line projection from last year. So up to if we can break 5 relatively quickly this month, then 7 pence could be the target for the shares by the end of next month. Letting back below 3.5 pence, which is April-May, initial May resistance and April resistance, really delaying the upside scenario on Harvest. Iqai is back as well. That was sort of one of the heroes for earlier in the year, but rather failed in terms of its breakout that we had around January time. I suppose was the last time it looked like the shares were going to break higher. Bear trap situation back below the sort of 7 pence zone for the stock, but now we're climbing again, and it'll be interesting to see whether we can get a weekly close, well, either this week or next week above the May intraday resistance at 8.3 pence, above 8.3, then a return to the 10 pence zone. Best case scenario target here over the next 2 to 3 months as high as 18 pence, which is that December resistance line projection. And that's valid while we hold above the recent low there at 6 pence on an end of day close basis. So slightly complicated there, but after that bear trap in May below 7 pence, it looks rather more encouraging for Iqai at the moment. A requested stock, which is accompanying news as well for Jubilee Metals, a rather busy company at the moment. Here we've got this broadening triangle in place since September last year. Top of the triangle heading towards 25 pence. That's a target now by the end of next month. That's valid while we hold above the 50-day moving average around 17 pence. So above 17, looking for 25 by the end of next month. RSI around 57, which is a good place to be and does suggest hopefully on this occasion we'll have less of the 3 steps forward, 2 steps back price action that we've had over recent months and delaying the upside scenario. On to metal NRG, which has caused a little bit of a flurry today in terms of its price action. Here we've got a situation where after yesterday's brief bear trap below the 0.55 pence May support, we bounced quite well. Probably want to see an end of day close through 0.65, which is that March resistance line projection. If we can get that achieved on a weekly or a end of day close basis, then one could start to see a journey which will initially retest April resistance at 0.9 with the bigger picture target over the next 2 to 3 months as high as 1.4 pence. We're more confident of that kind of move given the brief bear trap that we've seen and the bullish divergence in the RSI window as well, which has accompanied that little probe down to 0.5 pence on metal NRG. I occasionally and periodically look at Encondezi Energy. Here we also had a bear trap situation. Recent support around 2.7 pence versus the 2.8 pence low of back in October. And the longer we stay above 2.8 pence, the greater the chance of a move up to 4.5 pence, which is a March resistance line projection just above the 200-day moving average at 4.25 pence. Could see that 4.5 pence plus as soon as the end of this month if we've got a bear trap effect in motion, which it looks as though we have with that long green candle for today's price action so far. Stock which has been something of a hero of late and looks like it's returning to that particular mindset is Palatin. We had that gap through resistance in April. That remains unfilled. We haven't been anywhere near the top of that gap at 44 pence. The last low there at 46 pence, so that's pretty impressive. Rising trend channel now after the break of the February resistance line there at 50 pence and above 50 pence looking towards 72 pence at the top of the February trend channel. But the big plus here, that unfilled gap to the upside, that sort of so-called rocket launcher type move, and that is pretty impressive at the moment. Moving along to the last 3 stocks today. One is an old favorite, Predator Oil and Gas, which has sort of remodeled itself as a very bullish looking situation. Today we've actually broken 2 new highs for the year, which is quite an achievement in the current market. So a break of 19 pence does suggest that we could head up towards 26 or 27 pence well before the end of this month for Predator. So looking pretty impressive for that particular situation. On to another stock where it's quite a relief that we're seeing positive price action. Tomco. It was a long time in the making, months in fact, and only really started after that bear trap gap reversal that we had. So basically getting you long around the 0.5 pence level on the end of day close above the top of the gap. And so far over the last week or two we're doing rather well. We had a target on the bear trap gap reversal, the gap close reversal, up to 0.9 pence plus, and although that looks rather ambitious last month, it looks rather more achievable this month, and it should be seen by the end of June, especially while we hold above the initial May peak at 0.65. So above 0.65, looking for 0.9 pence plus by the end of this month on Tomco. For finishing up with a stock which is, I think, making its debut on the Bulletin Board Heroes. Here we've got Time Finance, and if the charting configuration is right, i.e. the trend channel is drawn correctly, then we've already got the low in place there at 26 pence this week, and we'll see 40 pence by the end of this month. Again, another of those situations where you've got a bear trap gap reversal, and we're holding the gap higher through the resistance which was made in March, and ideally we hit the top of the channel relatively soon. That's it for me this week. Join me again early next week for more Bulletin Board Heroes.